Hey everyone, welcome back to my channel. My name is Rian, and today we will look at how one would go about to find a good trader on eToro or a good investor. So you've heard about eToro and you created an account and now you are stuck. So you feel like, who should I copy? How do I know that this guy is a good person to copy? So that's what I want to talk about today. So I want to show you guys a few things that you can look at or analyze when you are looking or just weighing up different traders who you are interested in copying. Now, if you haven't heard about eToro, if this is your first time that you are hearing about eToro and copy trading, then please see the description, the link in the description. So you can click on that. It's my affiliate link to eToro. So you can click on that and then also sign up onto eToro, and you can go and look for any one of these traders in the same way that I will show you guys now how to find a trader. All right, so let's get right into it. So all right, so if you log into your own page, okay, or into your own account, you will see that if you click on your account, you would land by default on your feed. You can see your stats, you can see your portfolio, and also your chart. Okay, now this is mine, obviously, but to get to where you discover new people to trade, you click on the discover link on the left. All right, now here you can see that this is an all comprehensive page. This is a page where you can find stocks, crypto, indices, ETFs, commodities, currencies, everything. But what we are interested for today is this part, the copy trader part. Okay, so I'm going to click on view all. All right, now the first section here is the editor's choice. Now this is exactly what it says. It is the editor's choice. Now, in my experience, people who makes the editor's choice, it's people that are quite often unique, so in their trading style, or, it's people that have consistent gains over the past few years, like a consistent high level of gains. And these are people that eToro generally had interviews with. So it's people that I would say that if they are on the editor's choice, that you could most probably trust that this person, is not going to lose your money. I have to say that you have to be careful. It doesn't mean that if somebody's got a star, it doesn't mean that they are, a professional. So it means that, this guy has enough experience trading that, and so there's different types of ways that people get approved onto eToro. So eToro is quite strict with who they allow onto the Popular Investor Program. So it's not just anybody, but the blue star and the red star, there's not a lot of validation on those. I think the people from the green stars, the pros, and then the elites, the black stars, and those are the guys that have to complete the financial courses, and those are the guys that have to go through extra levels of validation, high level validations. But I would be careful for blue stars and red stars, as it can really be anybody. So it's just something to keep in mind. All right. So all right, so editor's choice. So you can see here that from a high level view, you can see that, this Laura Ontrop, I hope I say that correctly, she's got 36% return in the last 12 months. This guy's got Bin, it's got 81%, and you can now go and click through the guys, and they all differ in style. So you'd have to go into them. You can read the little piece of their bio here, but you would have to go into them and look at their trades to see, is this guy index trader? Is he a equities trader? Is he a currency paired trader? Is he a crypto trader? So those are the things that you're going to have to look at. All right, so that is the editor's choice. Then you have the section that says most copied. Now, it doesn't necessarily mean if these people are most copied. Doesn't mean that they are any good necessarily. Okay, you have to do the analysis, because people like to go where other people are going. Especially, that's mostly the trend in the world. If everyone goes one way, people very seldomly wants to go the other way. So there's a term called contrarian thinking, or being a contrarian investor. So usually for me, personally, if everybody goes a certain direction, I tend to go the other way. So that's just how I'm wired. But it's just a heads up. So it doesn't mean that if this guy's got a lot of copiers that he's any good. And I'll actually show you one example of that as well. So it's kind of like that snowball effect. Like, this guy just has a lot of copiers, and because he has a lot of copiers, he just gets more copiers and more copiers. So it doesn't necessarily mean that he is any good. All right. So there you've got the most copied section. Then you've got trending. So these guys either have exceptional returns, or for whatever reason they are trending. They might, have green results or green months for the past 2 or 3 years, or whatever the reason is that they are trending on eToro, then they would feature here. Then you get long-term stock investors. So this is classified for you. I mean, this is, guys that's invested in equities, and they are keeping trades open for a long time. They don't trade often, so they are, investors in the full sense of the word. Then you get long-short investors. Long-short, well, a short is a put. It's a sell. So probably these guys are long-term, short sellers. I'm not 100% sure, but that's not important for the video. And then you have multi-strategy investors. So these guys obviously probably invest in all kind of things, different strategies, different asset classes, etc. All right. So I'm going to I'm going to grab any person. Let's grab any guy. So maybe from, let's click view all. And I'm just going to randomly scroll. Let's go. Blue star, 75%. I actually just want to choose somebody's name who I can pronounce. David Eros. Arash. No, let's see. Anybody with an easy name, please, because I'm going to say it quite often. Let's see. Kevin C. Let's go for Kevin. 39%. Kevin C, 73%. All right. Now, the first thing you can notice, as soon as you click on a person, it opens up on their stats page. But I would say start on the left. Now, this is your 4 most important tabs that you need to look at. All right. So the first thing is you have to read the bio. Okay. Now, the bio, you can see sometimes it's in another language. Like I can't read that, but you can click on translate. And then I think it uses the Google to translate it. All right. So this guy says he's 100% long-term equity portfolio. So he's only in equities. He doesn't invest in any other asset class. So you won't find any gold or any crypto or anything else in this guy's portfolio. It's 100% stocks. Okay. And we're going to check if that's true. Right. He says about 60% is on solid stocks. Now, I don't know what he means with solid stocks. It might be blue chip companies. It might be, companies with consistent gains. I don't know what is his definition for solid, but it's solid. Then 35% on companies that are growing rapidly. So basically growth stocks. This would probably be guys like Tesla or any of the EV sector or these tech companies, maybe Facebook, Netflix, those kind of guys. So that's fast growing. So it might be some of those. And then 5% of my capital will be placed in shares directly related to cryptos or commodities. Oh wow! So he gets exposure to the crypto market via companies that hold crypto. So like everyone knows Tesla owns Bitcoin, or a part of their portfolio is Bitcoin. So, this guy gets exposure to crypto by investing into companies who owns crypto. So that's kind of his safe way of getting involved in crypto. All right. Let's see. I favor long-term positions as well as dividend-paying stocks to ensure minimum annual return. Okay. I diversify as much as possible to cover sector rotations. That's good because it always rotates. I choose my actions according to the ratios, margin, profitability, growth, and debt. Risk management and money management are the main things I keep in mind. That's good. No leverage in order to keep the underlying asset and benefit from the dividend. Yes, 100%. Leverage trading is very risky. I do not buy crypto or commodities directly to avoid platform fees. Yeah, that's true. So commodities, there are fees. There are daily fees and monthly fees, weekly fees. But cryptos does not have that. So he's not accurate in saying that there's fees on cryptos. There's a once-off fee. There's a spread fee. There's no daily fees on cryptos unless you leverage it. but he says he doesn't leverage. So, but commodities, I know. If you open up oil trades or whatever, then you do pay daily fees, and that can rack up quite substantially, but not crypto. So that's not accurate. Then he says, I have a target of 15% annual return. That's pretty realistic. I like that. That's just a little bit more than the S&P. On the portfolio excluding dividends, do not hesitate to comment on my analysis to exchange our opinions. Cool. So this guy seems open to learning. He seems open to your ideas. He seems, that he is available for you to engage. So that's good. I like that. All right. The second thing that you need to check is the feed. Like, how active is this guy? 3 months ago, he posted here. 3 months ago, 3 months ago. All right. So you can see that he was quite active 3-4 months ago. So currently now he's not that. So it might have been a little bit of energy burst, and then now he's gone. Or maybe this guy's, well, I hope not, but maybe he's dead. I don't know. I hope that's not the case. But yeah, he hasn't activated, or he hasn't typed anything on his account for the past 3 months. So that's not good. The stats page. All right. So the stats page. Now this is quite nice. You can see that this guy has been on the platform since March of last year. So a lot of this returns could have been, if he bought at the pandemic low, then he would have seen, this gain, which is, look at this. So 8% in April. So he bought in when the market was pretty low. So, a lot of this gain, but he kept that through during this year. So I think this guy, so from a preliminary basis, it looks like he knows what he's doing. And he's got some history. Personally, I would prefer somebody with a little bit more history, somebody that I can see has been consistently profitable for the past 5 or 6 or even more years. 2 years is a little bit on the low side for me personally. So, but I like that it's not just this year or just a few months of activity. I like that you can see, just a few, like for last year as well. All right, then something very important is the risk. Now you can see that he has been keeping his risk consistent. You can see that it's an average of 4, and then there's some months where it's 3, but it still went up to 4. So I would say his risk is about 4, which is good. So it means that he doesn't have too much risk. He doesn't take too much risk, and he doesn't not take any risk. So you have to have that balance. So 4 is kind of like in the middle. It's not low and it's also not excessive. So it means that his returns will probably be where they are now. He won't have small returns, but he also won't have any massive gains because he manages that risk. So I'm happy with that. I like that. All right, this is not as important. You can see that his copiers has been growing slowly. This is not indicative of anything, so I don't really care about that. He's got 108 trades, and you can see that he did trade crypto before on his platform, even though on his portfolio, even though he says he doesn't trade it. So maybe when he opened up the account, he was playing around with some crypto. That's possible. But now he says that he doesn't trade it anymore. So, but yeah, we can see from this that it is here. He's most frequently traded is Apple. He's got 4 trades. Yeah, it's not a lot. And then here, so this is true with what he said. So 11.5 months, 11.5 months holding time. So it means that he really is a long-term holder. So I'm really curious now to see, which stocks this guy, has in his portfolio. And you can see he's been a member since last year, and he's 60.7% profitable. All right. All this not as important. Most important here is to see the risk. Look at the risk. Look at how long, how far you can see back. All right. Now, the most important part is this. What is this guy investing into? All right, so he's got some of our FANG stocks here. We see some Apple, Google, Microsoft, Amazon, Visa, Danone, AMD, Meta, Nvidia. Yeah, this is quite diversified into tech. I see some energy sector. I see some oil. Let's see what else. PayPal. We see Target Group. Yeah, this is a good diversification. Very good diversification. Quite a lot of stocks. And like you said, it's only stock. There's no crypto. There's nothing else. I would like to see the breakdown per sector. I wish you had like a post where or some explanation where you could see how he breaks it down. Is this US? Is this energy? Is this, what is the breakdown in his stock? What is his exposure? Because I'm not familiar with all of these companies. There's some solar, which is the green energy sector. That's very good. Solar Edge to have that. All right, so that's cool. So now very important is to actually click on this little exposure button here. So here we can see, he's got his biggest exposure is into NVIDIA, AMD, Google, Apple, Microsoft, Amazon, and then it just gets lower, lower, lower from there. And then all the other ones makes up the rest. Okay, let's see what is his risk. His biggest risk is tied to AMD and NVIDIA and Apple. And those are all companies that, that I believe will continue to soar in the time to come, especially with the metaverse and, just the like Apple, their stake in the autonomous cars, Coinbase with the crypto. Yeah, so I think this is a good portfolio. I like this. Let's see allocation. So yeah, it's just markets. Yeah, there's nothing else. There's no people that is copying. It's only in the markets. But you can't see, like eToro's portfolios or stocks aren't classified into sectors. It would have, for me personally, it would have been nice if they were classified into sectors. Then you could see, like I said, in which how is his exposure to different sectors, into like finance, or like construction or tech or whatever the case may be. That would have been nice to see, that exposure. All right, then the last thing that you can see, the second last thing is his graph. Now you can see that you can change this. So over the past 2 years, if you copied this guy 2 years ago, Kevin, if you copied him 2 years ago with $10,000, okay, you would have had $13,000 now, which is cool. That's a 30% increase. That's not bad. Let's see, just for the past year. For the past year, actually, you would have done better. If you've only copied him, you would have had 14. So his last year were a little bit better than the 2 years together. But yeah, that's still a good return. Let's compare him to something like the S&P. So you can now go and just go SPX. So you can actually add the S&P. So you can see that, he's doing the same as the S&P. I think, let's see for the last 2 years. Yeah, so if you invested in Kevin and if you only invested in the S&P 500, you would have had the same return. So that just shows you consistently buying into the S&P 500 is never a bad idea. I mean, if I just bought into the S&P 500 every month, I would have had the same return as this guy doing all of his research, doing all of the effort to get this portfolio the way it is. You can see this is the proof. This graph turned a little bit weird now. Sorry, I don't think this graph is all that well. See, there it is. Now it's fine again. I think it like readjusts or something. Yeah, no, I don't think this is accurate because the S&P, this is not accurate. The first graph you saw, that's the correct one. All right, eToro, please do something about this graph. Okay, now the last thing that I like to check when I'm analyzing a trade. Oh, sorry. I wanted to say with the graph, what you are looking at. Okay, let's just go for the last year. What I usually look at the graph is I don't like to see sharp spikes. Okay, I don't like to see like heavy drawdowns, because drawdowns a lot of times, like I like to use stop losses on my trades, and I feel like it's a responsible thing to do. But if you see those big drawdowns, that's usually when, it either means that somebody's taking a lot of risk, but you won't often see that with people trading stocks, etc. You would see that with people buying currencies or any other volatile assets that might fluctuate a lot. So you might have, like that guy might have a few open trades, on a certain crypto or something, and then that crypto just tanks and they just keep on buying and it just goes down and down. So the whole portfolio just draws down and they just keep on buying until it comes back up. So it usually bumps up, especially if their trend is upwards. The trend will go up, it will spike, and then it will come back to where it was and continue. But that spike might trigger my copy stop loss. Remember, if you copy this trader, you have to set a copy stop loss. Because, again, I don't really trust people all that much, especially people that doesn't have a proven track record. So if you do decide to copy this guy, I would say a 60% copy stop loss is probably safe. I wouldn't go lower than that. So yeah, it's just something to keep in mind. But if you see on the graph, on the chart, that guy has a serious spike, check if that's not more than a 40% drop. Because if that drop is more than 40%, then your copy stop loss will trigger. And you would close the copy, and then that the guy's value will go back up and his trend will continue. Not always. I mean, he might lose the money and then just go south. But he might, you might close the copy, unnecessarily, and then lose out on the gains or the profit when it goes back up and continues on the trend. All right, if that makes any sense. So that's something that I look at. But if I look at Kevin, it looks like his chart is going up, steadily. There's not like massive. I mean, the difference here, it's not the 40% drop. I mean, this is 10%. So, that's what you're looking at. I just don't like this massive. There's another guy here that tend to have very big drops. Olivier Danville. He's trading currencies, so he usually has, very, very big spikes. But yeah, look at his profit. His profit is very low compared to the other ones. Let's just go to Olivier's. Let's just go to his portfolio quickly. If we go to his chart, look at this. This is what I mean. This would have cost, let's just do last 2 years. This would have cost my copy portfolio to close. You see, look at this. These massive drops. This is what I don't like to see. This is why I wouldn't copy Olivier Danville, because he would cause my copy stop loss to trigger. This is what I don't like. I don't like this massive spike. So this is a red flag for me. All right. All right, guys, without wasting any further time, one more thing that we can look at is, let's just go back to Kevin. Kevin, what was he? Kevin C73. The last thing that I like to look at is if you go to the portfolio and then you go to history. I like to see how he closes trades. So if you go down, he doesn't close anything. Let's see in the past 6 months. Yeah, no, he's seriously a long-term buyer. You can't go further. But what I like to see is how people are taking profit, or how they, how long do they tend to hold on to positions? Do they allow it to go like very far down and then just sell out of it? Or do they, always just close positions and profit? Do they just keep on buying, dollar cost averaging in, and then, when it turns around, then close it, and then overall, only close out profitably? Or do they, like, at some point just cut their losses? So I like to see, I like to compare those things as well. But all right, guys, thank you so much for watching. Like I said, please look in the description if you are new to eToro, if you haven't seen it, and if you want to sign up. And then also, if this helped, please consider subscribing to my channel. That would really help me out. And please give this video a like. And so I'm going to make videos on Monday, Wednesdays, and Fridays. It's a really hard work to make these videos, but I enjoy making them, and my heart is to teach, and I want to help everyone succeed financially. So if this helped you, please tune in, please subscribe, put on the bell, and I hope to see you in the next video. Thanks a lot, guys. Appreciate it. Goodbye.